Good morning. On behalf of Goodwill, I welcome you all for this webinar or Zoom Meet trading session, training session. Let us wait for a while. We can give 2 or 3 minutes for others to join. So I'm working here as a head of promotion in Goodwill. Okay. Okay, we shall start right away. Today we are going to discuss about the market outlook for Nifty initially, and we will take a glance about Bank Nifty index futures and options also. The chart out here, I have shared a screen, so I hope the screen is visible for you. And I'm using a very different trading platform, and you may ask which platform I'm using. It's called eSignal. It's a third-party trading platform. It's a American-based service provider. And the chart what I'm using now is a 1 hour chart for SGX Nifty index futures. So why SGX? So as you all know, our Nifty index is being traded in the Singapore exchange, and that is the SGX index. And why I want to use this SGX index for analysis? Normally for analysis, I prefer using this SGX index futures. And the reason is it's very simple. In Nifty index, so SGX is traded, you can see, if I enlarge this screen, you will see these dotted lines. You'll see vertical dotted lines of the trading sessions. One trading session will be for the Nifty, Indian Nifty market, and the other trading session will be traded in the Singapore exchange. So that's how it goes. So the basic thing is we will have a very continuous chart in SGX. So in Nifty index, what we will come across is most of the time we will see gap up or gap down price opening. A lot of gaps, so that disturbs our analysis. So I prefer using SGX index chart for analyzing the market outlooks. So if you're not convinced, I will show you that the comparison. So I'm going to share you another screen. Let me take the screen now. So SGX I could not show. Just wait for a while. I'm trying to search and find out the other screens. Yes, got it. So I hope you can see this screen. It's a comparison between Nifty index and SGX. The same 1 hour chart. On the top, the green and red color bar charts indicates SGX chart, and at the bottom we have our Nifty index futures 1 hour chart. What you need to look for is not the horizontal gaps. You need to look for the vertical gaps. You can see in the last 3-4 trading sessions, the market closed here, and what I will do is I will edit my cursor so that you can have some visibility. So here you can see the price close here and the next day the market opened here, and most of the time you see the closing and the next day opening always there is some gap. So that is not happening in that does not happen in the SGX Nifty index. So we could see some continuous chart which will be quite easy for our analysis. So I hope I have justified why we are doing some analysis in the SGX index chart. So let's come back to the original screen. So yes, and if you're seeing, if you're viewing this in your mobile, it will be quite difficult. Maybe you can manage to see this very big chart screen. I will go slow so that you can follow the prices. So this is an 1 hour chart. So what we are going to do with this 1 hour chart is the next question. Um, the first thing is let us start analyzing from the left. What happened? You can see the date and time below. What happened during the month of January? And again, I'm using a continuous chart, which means that even though it is a futures chart, I'm using a continuous chart. Continuous chart means for every contract we could see the continuous prices. So it's like one contract merging with the other contract. Um, so what you can do, you can unmute your mic once you enter, so that there will not be any disturbance. Okay, fine. So this is the SGX chart. Still, there's somebody who is using. You can unmute your microphone, so it will be easy for others to hear. Okay, fine. Now let's start analyzing from this chart what happened during the month of January. So here, from here, let me start. What I am searching for is this point marks the zone of 18,400, where the during the month of January the market went for this high. From there onwards, we could see a drop. Okay, and in this area where you need to focus is this particular zone of 17,000 and 17,200. Mostly the price dropped below that. Maybe you can say that because of some inertia, that you cannot expect the price to exactly stop near the same support. But our prime focus will be on this 17,000 and 17,200, where the price went up again towards 17,800. Okay, so from there onwards, again there was a drop as expected. 17,200 and this particular zone gave some support, push the price a little bit higher, but could not clear the previous high. So again, there was a drop. The price was trying to move. You could see the high was decreasing, but finally, why we are interested in this 17,000? You can see that a breakdown below this pushed the price towards 16,200, and even the price went below 15,000. 600. That was the approximate low that happened during the month of March. So when the price starts climbing up, the same zone, you could see the price had some resistance in these 17,000 levels, and after there was a breakout, the price converted this into a support. From there onwards, during the month end of March, the price start moving up. So let us stop here. Okay, let us stop here. What happened by the end of March? So this was the area why we want to stop here. This was the zone where the March month contract expired and April month contract, the active part of April month contract begins. From there onwards, you can see a little bit of consolidation, the price shooting up towards 18,200 and dropping down and staying near 17,800. So I'm going to stop here. I'm going to delete all these annotations. So it will take some time. I'm going to delete all these annotations. Then we will come back and we'll try to draw the supports and resistance. So after seeing all these things, it's quite clear that moving from right to left, you see, I hope you can see my cursor. I'm going to enlarge the scale just to have the overall market outlook. So before you start analyzing a particular week or zone, we need to have an understanding of the overall market outlook. Then we will try to position ourselves and draw the supports and resistance. Why I have drawn this line, and it justifies it's a valuable support. And again, I have drawn another line. It also justifies a valuable support. Here I would like to draw 17 here and 17,000. So that's all. It's quite simple. You can draw any support and resistance yourself. Now if you move back and see, these are all the key zones where the market had provided some sort of breakout or breakdown. And if you want to add a support below this 17,000, we can have 16,600. So these are all the various supports and resistance that had impacted in the recent time. And here I am adding 18,200 and this 17,900 levels also. So yeah, now you see that if you go back and see each and every support and resistance for a period of 2 or 3 months, you will understand these supports and resistance has got a meaning. So after now what we want to know is what we are going to do here. Now this is a time where I'm going to enlarge the scale and show you where we are standing now. So you can see at the bottom the date marks 11th, which is the 11th of April. Since we had only 3 trading sessions for this week, so I feel that we need to do something different for this to make this session a little bit interesting. So I have picked the price point that's the starting of this current week, Monday. So what I'm going to do is I'm going to run this session. So you can notice that the price every stick moves 0.5 seconds. It looks like a sort of live session. And so what you would have expected for this week? It's quite simple. See that there is no doubt about the trend. By the at the beginning of this contract, the market had a very good run. Almost it shooted up. You could see that within 2-3 days the price shooted up towards 18,200. And when you start this week fresh, you may expect the price to take support near 17,650s, and till 17,400 you would have expected the market to take some support and just move on, because given the overall market outlook, it looks like the price is going to break this 18,200 at least. If at all the price is not breaking above 18,200, you can there are a lot of reasons to believe that the price will take support near 17,650s, and this particular the 17,450 within this range. With this understanding, I'm going to run this again. So you can see slowly steady the price. It will give some feel like a real trading session. So the price is coming down towards 17,700, taking some support. So possibly we may expected some support, but it broke those 17,600 quite easily. And the next day also it's continuously trading. As I had mentioned, it is a SGX session, so Singapore Nifty index session. So you will have 2 trading sessions a day. So the price broke 17,600, again coming back to the key level of 17,400. And somebody thought that this is a very good support, and you can see the momentum it had once the price tested 17,400. Again, it could not move above 17,600. So the price was falling. I'm going to, again, if you want, I can enlarge the scale a bit. So the next trading session, still it is not coming down below 17,400. It's trying its best to clear 17,650, finding some strong resistance around 17,600. So it's moving sideways. So what happened yesterday? This was a price action that happened yesterday. So the price broke this 17,400 and came down till 17,320, and it's staying somewhere near 17,450. Probably some of the price actions, so these are the certain price actions you would not have witnessed in the our Nifty, our NSE exchange. Okay, so so what happened after our market closing? So the I'm going to enlarge this scale. Okay. So what happened yesterday on 13th? You can see right after the opening, the market went up, but again, 17,600, 650 provided resistance, so the price came down. After the closing of NSE, we had a continuous. Even now, the price is. We can see the price movement here because now the Singapore exchange is live. So what happened? There was some breakdown below 17,400. Now the price is trading somewhere near 17,500. So it's a real market live session. So with all this understanding, what we are going to do now. So in order to get a grasp of what is happening, you can use some technical tool, and normally what I prefer to use is a sort of moving average. I use to get some understanding about the volume which is playing under the price. So what I have added is an volume weighted moving average. You may ask what is a period. It's a 220 period volume weighted moving average. Please don't ask where to go and find this volume weighted moving average. So if you have any tools, trading charting platform, normally used to have these moving averages. So what is this average saying is the price trading below the average and the price and the volume moving up. It looks like a sort of negative volume. Yeah, so I'm going to just to have some understanding. I'm using this, but not so you can use or you cannot use, just to have some understanding what's the pushing the price down. So there is some volume that is pushing the price down. So what are the conclusions we can arrive so for the next week? That's going to be the next discussion for today. So what are the possible outcomes? So in order to get these possible outcomes, normally what we can use a trend channel. Trend channels are very effective tools, and I have drawn this trend channel earlier, and just I'm adding it. But if you want to draw yourself, you need to spend a lot of time to understand. You need to mix various trend channels and find the right combination. So this is a downtrend channel, and so I have picked all these points. You can see these major points, and we could easily say the price was following this pattern of downtrend. So I'm going to delete this annotations. Okay. Normally when I draw 2-3 trend channels, it will confuse you. So I'm going to delete these annotations and I'm going to enlarge these trend channels. And the other question is, you may very well ask how to evaluate this trend channel. So you can easily say that how this is, whether this is a good channel or bad channel, how to confirm that the price is following this path. So after drawing this, so trend channel is nothing but see, the first white line is a just a downtrend line, and if you draw a parallel line to that and two more parallel lines, it will become a channel. So it's not a very big deal. So now I'm going to move this line. So after moving this line here, you can see this particular zone is acting following this path. So you can move this line here. You can see this particular zone is following the path. So normally when you move this trend path here, so these are the diagonal support and resistance line you can use for confirming the trend path. Okay, so I'm going to stop here by connecting all these things. So there will be some zigzag price movement away from the trend channels. That is not very much important. So this is a downtrend channel, and what this channel conveying to us. So now the price is trading. I'm going to enlarge this. So now the price is trading somewhere here around 17,510. So the price can, in order for the market to move up, the price should break this downtrend path, the white line, and it should have a closing above 17,650 and the opening above 17,650. So what will happen? See, once the price breaks this trend path, so the sellers will come out of the market and the buyers will be eagerly waiting for the price movement above 17,650. Once you get an opening and closing above that, so there will be a lot of changes in the technical tools. Most of the technical tools will be very positive once you get a closing or opening above 17,650. So from there onwards, you can expect some sort of price action on the upper side. So this is on the buying side. So if you're if you want to stay on the sell side, if you see that you can always make place your stop above 17,650, and you can go on the selling side, considering this 17,650 as a major resistance. So two possible things this trend channel can convey. So this is this 17,000. What I'll do, I'll delete these annotations. So okay. So this particular area, this triangle here, this particular area is very important. So the price will find a lot of resistance in this zone if you're trading on the downside, or if you expect the price to continue its downside price movement. And if the price is breaking this violet line, and if it is moving down, it says the trend is very strong, or the price is going to deviate from the upper band of the downtrend channel, and it's likely to move towards the lower band. And if you remember, at the beginning of this session, we discussed about a major support 17,000 and 17,200. From January, February, March, and in all these months, this 17,000, 17,200 had acted as a major support for the market. So, so this support aligns with the downtrend path of this trend channel. So whenever the price comes near 17,000 or 17,100, there are a lot of chances once the price hits the bottom downtrend channel, the market can pick some momentum on the buying side. So these are the various things you can learn from these trend channels. Again, I'm going to delete the annotations. So this is on the downside. I will try to add another trend channel. So I'll hide this first trend channel so that it's not going to confuse you. So I'm going to decrease the scale. So let me check if there is any queries. Okay. So this is an uptrend path. So I have earlier we saw a downtrend channel. Now this is an uptrend channel. What this channel says that I have connected these two lows, the recent lows that happened, and I have drawn a uptrend channel. So to a certain extent, this trend channel conveys a message that the market was following an uptrend path. Okay, so this was the path of the price, and recently the price, the market broke this path and it tested the lower band and it is moving up. Again, if the price is going to come down below this white line, or in other sense, if the price is trading below 17,400, it is not good for the buyers. The price can easily move towards 17,000 or 17,200. So why I'm stressing this 17,200, I will come back to you again. So this is the inference you can understand from this uptrend channel. So let me delete this. I'm going to enlarge this trend channel again now. So okay, so in order for the market to maintain its buying, it is very much necessary that the price stays above this 17,450. Now we can see the various possible price opening. Now let us visualize and see, or what I will do, I will try to add the previous trend channel also. So once we start adding these two trend channels, okay, now let me keep this. So what are all the zones where the market can open? Because we have today is a holiday and tomorrow is also a holiday, and 4 days continuous holidays. Only India is closed, Indian market is closed, and And maybe Good Friday is an international holiday, so it will be a leave for Singapore also. But after the 3 or 4 days, if you come back on Monday, where can you expect the market to open now? So it gives you a lot of insight. If the price is opening below 17,400, so it's a big negative sign for buyers, as it comes below the trend path. And there are a lot of reasons you can say the price will come and hit 1700 or 17,000 for the next week. And we have only 9 trading sessions left for this particular contract to expire. That is another thing you need to have in mind. Or if the price is opening within this 17 or within the range of 17,650 and 17,450 in the midway, it means that the price is going to consolidate within this range of 17,650 and 400. You cannot expect some big price movement on the upper side or big price movement on the downside. Why? That is the another question. I'm going to share you another screen which can certainly what I'm going to stop this screen share. I'm going to share you another screen which can give you some insight why you cannot expect some big price movement in the coming days. So this is the India VIX, so volatility index. So this is a chart for India VIX, which gives us an idea, 20-minute chart for VIX. So now you can see the price. The price is trading somewhere near 18 now. So, the understand why we want to see VIX. It gives us a very clear message. When the VIX is dropping, okay, when the VIX is dropping, you can expect the index to move up. So they both are inversely proportional. When the VIX comes down, and you can see some upward movement in the index. When the VIX moves up, you can see some drop in the index. That's a simple understanding or correlation between India VIX and the index. Why, how it is related? I'm going to decrease this chart, and I'll tell you that this 16, 16 is a major support in the index VIX. So the price is approaching the major key area of 16. Whenever the price is staying near 16 or below 16, recently, even I can decrease the scale and show you, there are most of the time the market gave a bounce back from 16. The VIX moves from 16 and it can move up. So what happens when the price is testing 16, and so there are chances from 16 the VIX can move up, so the volatility index can increase. So if from 16, if it is moving towards 20 or 22, it means that there are a lot of chances that the Nifty can still fall. So the VIX is not on the helping side for the buyers. This is another reason which we should think. So I'm going to stop this screen, and I'm going to come back to the SGX screen, and I'm going to delete all the all these. Sorry, I don't want to delete it. I want to hide it. I'm going to hide all these trend channels. Now let us see from another point of view. So what is the other point? So the point is this particular contract, this April month contract started here around March 30 or 31st, around 17,500. From 17,500, it went up till 18,200. Now it is staying exactly near the same area where we have only 9 full trading session left for expiry. So within this 9 trading session for this particular contract, what are the possible things you can expect? VIX is not helping. So if VIX starts moving up, surely what you can expect the price to come and hit 1700 or 17,000. So that's the reason I insisted that if the price is coming down below 17,400, you can expect the price to come and hit 17,000 or 17,100. But is there a chance the market can break 17,100 and come, it can still move down. But in this contract, we seriously don't think so. So because as we started this discussion in viewing the overall market outlook, 17,000 and 17,200 will act as a decent support and stop the price drop. Or this is one possibility, and this can happen based upon, you need to watch on Monday and Tuesday where the price is going to open and close. If the price is opening somewhere between 17,500 or within this range, still you cannot expect the market to move up, so move above 17,600. For just, for example, assume that the price is opening near 17,600 or within this range. There are a lot of chances you can expect a sort of consolidation rather than the index breaking, giving a breakout above 17,650, because of the reason, as I showed in the weeks, it's staying near 17. Assume that if the market is opening near 17,600 or 17,700, VIX will be somewhere near 17 or 16 now. So it's a support. So when it starts moving up, VIX moves up, the index can come down. So it's a simple logic in all the combinations. It says that you cannot expect a very big upward move. You can expect a sort of drop, but the drop will be a sustained somewhere in and around 17 or 17,200. And you can see most of the time when we see a contract which opens at a particular point, the active part of the contract which opens at a particular part. I know the contract opens way before 2 or 3 months at the active part of the contract. What I'm insisting is that the active part of the contract starts around 17,500, now standing in the same position. It all means that see, um, you cannot expect a very big swing in the coming 9 days of trading session. The possible outcomes are, you can expect the price to come and hit 17,200 or 17,000. All depends upon the Monday and Tuesday. We need to see where the market is opening. A positive opening above 17,600 or near 17,600 can give some sort of momentum for the buyers, but it will not take you somewhere above. So with this understanding, and now what I expect you to do is just look at these price actions and just have a picture of this, because we are going to start discussing about the option prices. So again, I'm going to stop sharing this window. I'm going to pick the option chain. So this is the option chain for the April monthly expiring contract. So uh, after having some understanding with all these things, what we can do in the options market, because nowadays you know that trading directly in the index futures, it's a bit costlier because of the margin regulation. So most of them we need to take an option route. The other option is options. So and in that option, for most of the traders, as a buyer of option, because of low margin, people are interested in that. So we will discuss about the various buying opportunities as the buyer of call or buyer of put option. First, let me, this is the option chain. First, let me start with the discussion by considering the uh, put option. So I'm going to see, let me try to add a put option screen. Okay. So now the chart, what you're seeing is for 17,000 strike put option. Okay, this is a 17,000 strike put option. Since it is a 17,000 strike put option, it means that it is an out of money put option. Okay, now you remember that our expectation was, if the price moves down, the price can come till 17,000 or 17,200. So we have taken those strikes, and now at present it is an out of money put option, and the chart what you're seeing is 20-minute chart for that particular 17,000 put option strike. And in our in NSE, the on the yesterday's trading session, the price closed near 65. Now just visualize. So if the market is opening below 17,400 on Monday, we have 4 days of time decay, and that will have an impact. And if the price is opening down, somewhere you will get the price to open between 80 and 70s. So within this range you will get the price. You will not get a much higher jump, even though it's expected to open lower. So because of the 4 days of time decay, it will have some impact. So if the price is opening below 17,400, it will be better for you to pick the 1700 out of money call option, to buy somewhere within the range of 60s and 80s. So you can place stop loss below 40. So possibly it will be a 40 or 50 point stop, which can justify your investment. So if the price continues to drop, what you can expect? Surely you can expect the market to go and hit 120 or 150, the next two resistance. So this is the best chance if you want to stick on the selling side. If you expect the market will continue to fall, if you see any price opening near 17,450 or 400, so you can pick this 17,000 out of money call option as as based on our expectation. If things if the index falls near 17,000 or 1,700, this will become a near the money option or at the money option. So you will have some decent profit. This is one way of saying it. So this is for the uh, people who expect the price to come down. On the other side, let us take some 18,000 call option strike. For see, the whatever we are discussing is for um, April monthly expiring contract. So this is an 18,000 out of money call option. So now it's trading somewhere near 53. If the price is moving above 17,600, and if you feel that there is some momentum on the buying side, assume that yesterday the price closed near 53. If you want to get any price movement above 17,600 in the Nifty index futures, surely you are going to see the price above 70, given all the calculations of time decay also. So you will see the price above 70. What you can do, you can take just a 30 point stop, and you can buy above 70 and place a stop around 40, and you can place a trade. This is one way of saying it. I will give you the another possible outcome, another possibility also. So what I'm going to do, I'm going to add another strike price, which is which may be quite interesting. This is 17,600 call option, which is quite near the money. Okay, so you can say a little bit at the money also. So yesterday the price, this is again a 20-minute candlestick chart. The price closed near 180. Why we want to focus this particular strike? Assume that the market is dropping, and if the underlying asset reaches 1,700 or 17,200, you expect some sort of support in those area. By that time, what you can do, you can select the 17,600 call option. You can buy within the range of 100 and 150 with a 50 or 40 point stop, and you can expect the price to go and hit 200 or 220. Again, you can expect some sort of bounce back. So the three options we gave in the option chain. So if you see the advantage and disadvantages, so it will have a risk reward ratio 1:2 or 1:, more than 1:1. So if you keep 40 point stop, you can surely expect the price to move above 40 points. And since the price is approaching expiry, we are getting the option premiums. The option premiums are quite cheap in the monthly contract, but that will not be the case when the new contract opens. Mostly for Outlook and for these webinars, we'll be using the monthly option chain, and we are not more interested for this discussing this market outlook and price actions. We will not be taking the weekly options. So with this, we are coming to the end of this Nifty market outlook, and we will try to give some glance about the Bank Nifty index. So let me check the chart for Bank Nifty. So after Nifty, we will. This is 1 hour chart for Bank Nifty index futures. Since this straight away the NSE futures chart, where you could see a lot of gap. So while reading the Bank Nifty index chart, it's quite simple. It's not complicated. So we have drawn a highlighted a zone which is 37,200 and 36,500. So this is the highlighted zone from the month of January, February, March, April. This zone is acting as a division for the price. So you can see the price hitting this the 36,600 moving up, and throughout the month of January, February, the market maintained this as a zone. And by the end of Feb and throughout the March, you can see this particular zone acted as a resistance. But at the beginning of this month of April, you could see that the market opened with a gap, and the market was trading or struggling to move above this range. So this gives you a very clear information. If the Nifty is not moving up, or if the Nifty index is dropping, you can expect the Bank Nifty index futures to come and hit 36,600 and 37,200, or stay within this range. And from here, there are a lot of chances that the market can pick the momentum and move up. So Bank Nifty compared to the Nifty chart, it looks positive on the buying side. So initially for this 9 left out trading session for this month, you can expect some drop if the Nifty is not very strong. Surely you can expect some pressure from the index, Nifty index. So it can push the Bank Nifty index down, but we feel that 36,600 and 37,200, this zone will act as a very strong support and will try to push the price up. So the key zone to watch for the Bank Nifty is 36,600 or 37,200. So with this, we are coming to the end of this market outlook discussion. So actually, we planned in the coming days, we will have some detailed outlook of on Bank Nifty also, because we want to check how much time it is taking to cover all the portions which we have planned for Nifty index futures. Almost it has taken some 40 minutes of time. So if you want to continue with the Bank Nifty, then it will take another 40 minutes. We'll cut short, and we'll in the next market outlook session, we'll try to cut short for half an hour session, and we'll try to make it up. So with this, we are coming to the end of this weekly market outlook. So if you have any questions, please you can ask. And we'll wait for 5 minutes, and because we know that it's a live, this particular session is streaming live in the YouTube and Facebook. From there on, there also people can ask questions, and we will try to, our IT team will try to collect all those details, and they will post me as a questionnaire. So I'll wait for 2-3 minutes, and then we will call off this day. So one question is, how about the local language? Why don't you take in Tamil? Yes, somebody is asking. My name is Praveen, and I would have seen those. Yes, I'll share. See, I have shared a screen were presented by Praveen T.S. I'm working here as the head of promotions, and I have some experience in this technical analysis. Normally, I used to post daily videos for Nifty, Bank Nifty, and crude oil. So I will share another screen for the viewers. See, this is our YouTube channel. So what you're seeing is our YouTube channel. We are doing a lot of work here. So here in these uploads, if you subscribe to our YouTube channel, by default, whenever we post new videos, YouTube will send that notification for you. And we are posting daily market outlook for Nifty, Bank Nifty, and you can see the live stream here. Um, you can see our live stream also. So please make use of our YouTube channel. Thank you for your appreciations. And Monday trend up or down. I have I'll tell you that this is not the end of the discussion. As you know that every day before the market opens, we are posting the market outlook for the particular day for Nifty and Bank Nifty futures and options, and also for crude oil. So it depends. See, as I told you, the price opening where the market is going to open on Monday will give you a very clear idea what is going to happen. Uh, we expect the price opening to be below 17,400, even though the price you see for today it was trading around 17,500. And we have 4 holidays, and if the price is opening below 17,400, it gives a signal that the price is dropping down. Somewhere near 17,600, if the market opens, it gives you an idea that the price will consolidate with some ups and downs, and the price will move sideways. Yes, I don't know to what extent it was clear whether I was fast in sharing these screens, because I have a lot of screens to share. Uh, yes. So I'm looking at all your queries. So I have a lot of screens to share, a lot of informations. So so it's, you can give me some inputs. I'll try to follow the next time. Whether I'm quick in sharing the screens, whether I should be a little bit slow, or what are the other things you expect from us. Maybe if it is not possible to do in a single meeting, we will try to do in different meetings. Okay, I'll wait for a while. Maximum downside level expected. That's for Nifty index, which is 17,100 to 17,200, maybe near 17,000, within that range. Not more than that. So what I mean by not more than that, in the sense we have 9 trading session for this particular month, for this particular April contract to expire, and the next month contract is a different thing. We need to have a different angle, and we need to think about that separately. We should not confuse the upcoming May month with this April month. See, every time if we should understand the it begins and ends, and again it begins and ends. So one contract, from the end of one contract, the other active part of the contract begins. So because you see, nowadays people are trading more in options, they need to close all their positions, and much more activity will happen by the end of the contract. So within this end of the contract, the maximum drawdown or the drop you can expect maybe around 1700 or 17,000 and not more than that. Given the situation of VIX, um, there are a lot of chances, but continue following our daily market outlook videos also. So it does not stop here. We will try to continue that. Okay, fine. Wait for a minute. Okay, with this, we are coming to the end of this uh, online Zoom meet, and we will meet again on April 22nd, the next Friday, around 4 to 5 p.m. We will announce you all this detail in our webinar website, webinar site, live.gwcindia.live, and maybe you will all get the IDs and updates through SMS, WhatsApp, and what are the things we have. Thanks a lot for attending or watching this webinar through Zoom, Facebook, and YouTube. Uh, Thanks a lot. Enjoy this long weekend. Take care. Bye.